All right, 2 p.m. Central African time. It is the 18th of June. Welcome to it. This is Nedbank Business Watch. We hope that everyone's having a lovely day. We are certainly having ourselves a good day, and we do promise to give you a good show. Nedbank Business Watch. My name is Fiso Ngumalo. Happy to be here with you, with my co-host. Good. How are you, Tomben?
I'm good. How are you
Doing
this
all right.
afternoon?
Can't complain.
I'm good as well. And good afternoon to our viewers. Thank you for tuning in. This is Business Watch powered by Nedbank Eswatini. Today in studio we'll be joined by Nedbank's insurance specialist, Mcebo Masuga, and he'll be talking about property insurance, why Eswatini need to insure their assets, the benefits, and what it covers against. We'll also get to know if Eswatini have adopted the culture of paying for insurance, because there are perceptions that insurance is expensive and it is not worth it. He'll be here to join us to convince us otherwise, so do stay tuned for that interview later.
And here's another exciting story happening in the Kingdom of Eswatini. Eswatini's exports dropping nearly 7% year-on-year in May. That's a staggering 237 million Malangeni decline. The hardest hit, that's a question, Europe, where exports plunged by over 80%. Exports to Asia also dipped, but in a surprising twist, exports to North America surged by a 51%, and Oceania skyrocketed nearly 300%. And while Africa remains Eswatini's largest market, with exports topping 3 billion Malangeni, give or take, the country has now recorded a negative trade balance, which is, of course, a sharp contrast to this time last year. So, what does this mean for Eswatini's vision of export-led growth? We know that's a big vision of ours. Are we still on course, or is it time to recalibrate? And what are the broader implications for our currency, our reserves, and our financial stability? We put these questions to our economist, Sanele Sbia, who is going to join us here to make sense of the shifts, of the setbacks, as well as the opportunities.
Yeah, don't go anywhere. It's 2 minutes after 2. We go for an ad break and come back with our first story.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
All right, welcome back. You're tuned into Business Watch, powered by Nedbank Eswatini, and now for our business news.
Right, our first story speaks to this growing concern that is among local small and medium enterprises, especially contractors that they are being sidelined rather in government project contracts. The most recent being the MR21 and Main Road number 14 projects. The local contractors are raising questions about the 3.3 billion Malangeni tender process and whether it complies with African Development Bank, the AFDB standards. But where is the Eswatini Public Procurement Regulatory Agency, ESPRA? How far does the role of the regulatory body stretch in such projects? Vusi Matsebula, the chief executive of the agency, has added his voice to the issue.
We believe as ESPRA that you procure a loan whereby you compare the conditions of the loan among different service providers, in which case, in our understanding, it will be that you look into the conditions that will favor more your local situation, where probably would say maybe that loan would allow for a more participation or bigger participation of local contractors or local service providers to ensure that we get the finances or the money to circulate locally, creating jobs and also uplifting the economy of the country. We have been invited to Parliament at the Portfolio Committee for Finance Ministry, where they were asking our input in terms of what is the process that we believe should be followed when procuring the loans. We shared the same sentiments and established how we understand the procurement for these particular services. We would love that going forward, maybe we find a way on what would be the role of ESPRA at the early stages of the conversation.
Different industry leaders are being trained on the importance of contract management to prevent cost overruns and improper management, which can lead to overspending. The Chief Executive Officer of the Eswatini Public Procurement Regulatory Agency, Vusi Matsibula, states that they oversee approximately 93 entities, but the compliance rate remains low. This underlines the critical need for this training program.
The reason why we've got this meeting is so that we try and sensitize our procuring entities in terms of how best to manage their contracts. We've realized that over time, procuring entities give or submit the procurement plans, they submit all the other documents, the compliance documents, but they've been having some difficulties with contract management. And that is where the problem, because you find that contracts have got overruns, you find that contracts, sometimes they are cancelled, and we just want to sensitize them to say what are the things that they can do to make sure that the contracts are well managed.
There are specific areas that we are looking at. One, how to enter into a contract. First, to ensure that the contract is valid, the contract is recognized by the law, and also the contract meets the dictates of the procurement policy, the procurement regulations. So the contract that the entities must enter into are those contracts that then must be defendable in the courts of law. So that's the baseline. Thereafter, then we say, now how do we manage the contract to ensure that the service providers or the suppliers with which the procuring entities have entered into, they fully understand their obligations, meet those obligations. Then it requires now an intentional way of managing the contract. So you manage the contract to ensure there is a guarantee that the suppliers perform. That's the first thing. The second thing, you manage the contract because there are risks that are associated with contracts. What if the supplier does not do what they agreed to do? Then it means we need to be able enough before it has a negative impact on service delivery.
Over the last decade or so, Gulf sovereign wealth funds backed by the region's royal have turned their attention to a new arena, sports. Well, they're investing tens of billions of dollars around the world to gain returns, diplomatic sway and soft power. From football to Formula One and more, oil-rich countries including Saudi Arabia, the United Arab Emirates and Qatar view the industry as a gateway to more global influence.
Sovereign wealth funds are state-owned investment firms typically established with revenue from natural resources. They're controlled by governments and, as we'll see, the money ends up in a wide range of places and industries. Looking at the top bunch worldwide, half belong to Gulf states: Qatar, Saudi Arabia, Kuwait, and the UAE, where Abu Dhabi's ADIA has more than $1 trillion of assets under management. The world's biggest sovereign wealth fund, perhaps surprisingly, is Norway's.
They control around 1.7 trillion of assets.
If we look across the Gulf region, that all adds up to well over $4 trillion of assets held in these funds.
But over the last decade, the cost of clean energy alternatives to oil has plummeted. This is causing a less nice problem. Take Saudi Arabia, for instance, where the majority of the economy is supported by oil revenue. This green line shows the projected per barrel oil price needed for the government to balance its books from 2012 until the end of this year. This black line shows that since 2014, prices have mostly fallen below that.
You think about the airlines that you fly on, the hotels that you stay in, the data centers that hold your data. These are all things that sovereign wealth funds in the Gulf are now invested in. Sports is one of the things that has really sort of risen up the agenda probably over the last sort of 10 to 15 years.
Let's just look at some of the leading countries from earlier. By 2025, they'd collectively invested those billions across Formula One, golf, the NBA, the NHL, mixed martial arts, football, and related TV rights. Things have kind of snowballed since then.
The Qataris own Paris Saint-Germain, Abu Dhabi owns Manchester City, the PIF of Saudi Arabia owns Newcastle United.
And they've been pretty decent when it comes to financial returns too. Here is Manchester City and Paris Saint-Germain trailing only Real Madrid in one analysis of how much clubs pulled in during the 2023-2024 season. But what's changing is its reach. Take the developments inside President Donald Trump's favorite sport.
One of the most high-profile ones of the past few years has been Saudi Arabia's push into golf through establishing Live Golf as a challenger to the PGA. Ultimately, the governor of the Public Investment Fund of Saudi Arabia could well sit in a position on the board of golf's most important body globally.
It'll surprise few people that this has all drawn scrutiny and criticism.
One of the kind of most current and high-profile examples is in the case of Man City. You know, they're facing some pretty extreme accusations from the Premier League over the way that they do their financial accounting.
Accusations the club denies. So where do we go from here?
In the short term, it's hard to see how an investment in Newcastle or Man City is paying off. But actually, it's a long game. Hopefully, in a few years' time, we will start seeing more divestments and exits, and we'll be able to assess whether these investments have made sense financially as well.
If you look into the UAE and Abu Dhabi, they, I think, have done a pretty good job at using their sovereign wealth funds to invest in areas that will give them access to the technologies of the future, that will diversify their economies.
And that was the story we saw gaining a new chapter in May.
PIF has invested over $20 billion in a range of companies related to gaming.
And has actually said, you know, they're looking to spend around $40 billion by the end of the decade because they see such a huge opportunity in that arena.
Riyadh will again host the Esports World Cup in 2025, where tens of millions of dollars are up for grabs by teams competing in games including Valve's Dota 2. And you now know where this kind of money might be coming from in the future.
All right, and that's it for our business news. Thank you for staying with us. It's 12 minutes after 2.
We have Sanless Bia joining us in studio. In fact, we're joined by Sanless Bia virtually after the break.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back. Well, the numbers are in, and the Eswatini Revenue Service has released the May 2025 monthly merchandise trade statistics. And they paint a mixed picture for the economy. Eswatini exported goods worth 3.16 billion emalangeni, which is down from 3.4 billion emalangeni in May last year. That's a drop of over 237 million emalangeni, or 6.99% year on year, if you like. Now, the biggest fall was in exports to Europe, which plunged by over 377 million emalangeni, which is another massive drop, and 80% drop, that is. Exports to Asia also dipped, falling 9%, or about 4 million emalangeni lower than last year. But it's not all bad news. Exports to North America jumped 51%, Oceania saw near 300%, and South Africa, America, and Antarctica both recorded 100% growth. Small volumes, but promising signs. Africa remains Eswatini's strongest market, with exports rising by 5%, reaching just over 3 billion emalangeni in May. And here's the big shift. While May 2024 recorded a positive trade balance, May 2025 shows a negative trade balance as imports jumped by 10.3%. Joining us is Sanele Sibia to unpack the numbers. He's our economist. Sanele, good afternoon to you. Welcome to the program. He joins us virtually, by the way. Perhaps the first question to you, realizing that the government has championed export-led growth as a cornerstone of Eswatini's economic strategy. Exports are falling nearly 7% year on year, and a dramatic 80% plunge in trade and with Europe. Let's start here. What does this actually mean for Eswatini's aspirations toward export-led growth? Is this the engine that is still running, or it's splattering?
Good afternoon, Mr. Ngumalo, and good afternoon to the viewer. So what we're seeing here, Mr. Ngumalo, is, those global challenges that virtually every country is facing, with the new resurgence or with the new Trump administration, and we've seen quite a number of hiccups into global trading systems, and, we've seen some changes in alliances and all of those things. So we should expect to see a bit of a drop in our exports capacity as a country. And it also does speak, Mr. Ngumalo, to the fact that as a country we do need to ramp up our export strategy and find new export alternatives, so that we ensure that we always try to maintain a positive trade balance, or at least just maintain a balanced type of trade, so that we don't lose out in terms of too much payments being made to the outside world when we are not necessarily generating that revenue that we require. But what it mostly speaks to, Mr. Ngumalo, is the fact that we do need to understand that we have to find better sources of our better destinations, and like you rightly put it, we do need to look into Africa as well, to actually expand that trade and take advantage of the Africa Continental Free Trade Area and other trade arrangements. And also we should probably be encouraging companies to shift towards that new America market that has opened up to this shifts in trade relations across the globe, and ensuring that Eswatini is able to utilize this 10% tariff, which seems to be lower than quite a number of countries, and we do know that's the minimum that you can ever now pay when you will be charged when you're exporting into the US. So we do need to take advantage of that as a country, and we do need to keep those aspirations alive, Mr. Ngumalo. But one thing we've got to be aware of, Mr. Ngumalo, is actually the composition of the exports. It might seem like just this time it has gone down, but it could be quite a number of other issues, the seasonality they're in. And right now we've started seeing the resurgence of foot and mouth disease. And we do know that because of phytosanitary requirements, once there is a foot and mouth case in the country, you lose quite a number of export destinations. So, but we didn't expect to see the effects of that, say, in the May statistics. Probably we did expect to see that come through into the June statistics, but we do know that once that case has been found, all the beef that was going to the European markets and quite a number of markets, the US markets, now has that doesn't go to that destination. So we've got to look at all those short-term issues and the seasonality of the exports.
100%. And I suppose, taking from what you are saying, that we should have a sort of insular sort of approach. Does that speak to us being, if there's a question around us being on track, or, these numbers really suggesting that it's time to fundamentally rethink our trade strategy? What could be the knock-on effects then that could, come with this on our national reserves? And are we bracing for the right kind of impact?
Thank you, Mr. Ngumalo. So, no, if we are to perpetually run a deficit in our trade balance, then that would mean we are drawing on the reserves to pay for all our for our imports. So we should hope that going forward, the current account does balance on its own without requiring the capital account to actually help us balance our trade. So because that actually draws on the reserves that we have as a country, and we do need to find ways of making sure that we are able to go back on track and continue recording the trade surpluses that we've been seeing in previous months, and also going forward in the previous year we've seen that. So we need to go back to that track. So we need to look into the figures and find out what the problem is and try to find ways to boost, say for example, local purchasing, buying Eswatini, because that 10% jump in imports is quite telling of a story that Eswatini are actually importing quite a lot and they're not buying from within the country. But again, we've got to be mindful of the seasonality, Mr. Ngumalo. It could be that we are buying things that are just not available in the country, but we need them. For example, if you look into your price of tomatoes, it has somehow gone up purely because the supply is not quite adequate in the domestic market. And if you look at quite other things, so those things won't be happening, Mr. Ngumalo.
But I suppose tomatoes, we could have our own tomatoes grown in the Kingdom of Eswatini, and it raises those concerns. But again, looking at the current account, the deficit, the negative trade balance, it does beg the question: should we be concerned about the trajectory of the Lilangeni? What are these red flags for our currency or the broader financial system?
So basically, we do know that our Lilangeni is pegged to the South African rand, and that peg, Mr. Ngumalo, is actually cushioned by the amount of reserves that we have. We need to have at least 3 months of import cover in reserves to maintain a healthy peg with the South African rand. So if we're to perpetually run this current account deficit, then it does put the Lilangeni at risk of a depeg. But like I'm saying, it's not yet time to raise alarms. Maybe we'd start raising alarms if we see this picture persisting, say, for the next 3 or 4 months. But we also do note that once you see so much exports or so much imports coming into the country, somehow it means overall the demand for the local currency is supposed to be affected, but because we are linked to the rand, we never get to see such movements in the currencies due to this high export propensity so our financial sector is somehow shielded from quite a number of those movements because of that peg, Mr. Newman.
Well, Sanele, thank you so much for your time. Exports falling by nearly 7% year on year, and imports plunging a 10% give or take. Sanele SBI is extending the assertion that this could be seasonal. And I do want to take his word that he is being impartial, and I carry that with diplomacy and optimism that indeed it is seasonal and it's going to change, and we'll see some of these concerning numbers changing. We'll go for a net break and we'll be back shortly. Welcome back. This is Business Watch, powered by Nedbank Eswatini. Thank you for staying with us. Insurance specialist at Nedbank, Mcebo Masuku, is back again in studio today to talk about property insurance. All you need to know about property insurance and what you are actually covered against. Mcebo, welcome back. Thank you for coming through to Business Watch. So today, yes, we're getting to property insurance, one of the most critical topics, especially nowadays that, with the patterns change, it's windy, glamalanga. What is
property insurance?
Yes, thank you for having me again. I think today, just a bit, property insurance, insurance cover the structures in your home. It could be a shop, it could be your warehouses. Typically, it cover the structure. So meaning your roof, your walls, your fixtures, they get insured under that cover.
Yeah, yes. I think also we need to understand when you talk about insurance, what is insurance? Because yes. have we actually adapted the culture of paying insurance as eMaSwati? Because we know that some of us are a bit skeptical on paying insurance for years and years, and nothing happens to your car or whatever that you're insuring. Yeah. Why should we insure our assets?
Yeah, I think the insurance industry has had some bad reputations there and there. But I'm happy the more we engage our clients, the more they understand the processes and my requirements and exactly their cover. So we're seeing Velebantu taking up the cover, paying their premiums, and especially the more because the definition of insurance, it comes in when you have experienced an unforeseen loss to your property. So basically, I'm compensated through the financing of the repairs or just but I'm happy as engage my clients, they're getting more interested and more curious about protecting themselves and their properties.
Okay, so yes. Let's get into the assets that this particular insurance covers. What does property insurance actually cover against?
Yes, I think just starting about property insurance, I classify it differently. Your residential home, by book differently from your shops, and then also your flats. So, Leas Kaya and Jesse Bitang house owners, which is typically your residential home. But Onge Vele, they cover more or less the same events. So it could be your fire, could be your storms, your wind, even the hailstorms, including the accidental damage, for example, those cover that damage can fall under that same cover.
Okay, so and the weather department has actually a warning, be careful with our properties, especially cars.
Yes.
The past weeks, it was too windy, properties were damaged, structures were damaged. Claims
yeah, I think 1 year we haven't seen much, but from the conversation, seemingly it didn't do much damages, which tells me that people are taking steps to prevent such damages, meaning making sure that your roofing and also the wildfires that have started, making sure that your yard is cleared. Okay. So it tells me that they don't want to go through the traumatic event of having those couple of losses. Fine insurance is at the end, but the experience is traumatic to our clients. So I'm happy to say no, we haven't really had much, but we have had inquiries there and there. As it goes, but we're here to help.
All right. So let's delve much into accidents. I want us to talk about car accidents because I think the most common than, house break-ins, fire damages. There was an accident at Malakwane, and I will assume those people had insurance and insurance. When I insure my car, what documents do we need? Do you need to evaluate my car? What is actually needed?
Yes. Imoto. Well, it depends if you're buying a new car or a used car. The new car typically values the cover based on the value which be on the invoice itself. But in your good hotel, I will need your license, your ID. Of course, nale value motor which be on the invoice, and then just to check if now we are qualified and for certain discounts, because as Nedbank we insure with SRIC, They offer Swazimed discounts if you're a member of Swazimed. They do offer a tracker discount if you have a tracker on your car. So we also look at all of those things. And as a Nedbank client, you get to benefit ukuthi ubhanga e-Nedbank kunale discount as per yona SRIC. So all of those things then bakhona ke kukusibalela once we have those information. Otherwise, if you have an import, we will require evaluation report so we know the value of the vehicle and the depreciation value as we go forward year to year. Gani ngala kuleti let's my locals siyakhona ku check ku dealer's guide as we renew your cover. So it's not really complicated. Angihlale ngithi nje i-code asengikwendele ubone to see if it's within your pockets, and then we can take it from there.
Yeah, because I did say Guti, a lot of people are still skeptical even now to take their car insurance. So nakhona athina ma terms nangishayisa umuntu funa bangishayisa or get into an accident in another country, SADC country, kwendekana, what's the process, what's the procedure to get my claim?
Yes. A claim is very simple. As soon as you have an accident, depending on how bad the accident is, you might need to call for towing. Towing services are covered within your policy. So no matter now you're in another country, you end up paying for towing, maybe lower like it's a conic figure on time, you can come back and claim. But locally, ukona towing services lo buge vele ma clients ethu. Yakhona kumshayela boy akuside. Siqale sisinje sicela ushuthele if there was another person involved, tell some details akhe, especially nje mawushayise umuntu. I mean, even umuntu, we need to note because that person can then lay a claim against you, which is covered under third-party liability. So you don't need to worry about that. Sitawucela nje usigcwalisele ama-form, usinike ama-quotations for the repairs of your vehicle. Nalolo lenye imoto loyishayisile naye asilethele ama-codes. Utawubhadala nawe imoto yakho ilungiswe. But vele mawubhanga nathi uthole cover through us, sikufakela zero excess. You don't have to worry about paying excess magnet claim.
Okay, so ahamba kanjani mhlambe lama rates nasibuka ku insurance now coverage indlu a block of flats.
Yes.
Bamvana ma flats bane tindlu. How akatulini kakhulu, because we'll more about that indaba yetimali.
Yes, le tindlu I would say is I always recommend it because it's the cheapest amongst the insurers given the amount of cover you get. I would say to make an example, India 1 million is not going to cost you 3,000 a year to cover. So Maubuga breaking it down to monthly, it is not a lot of money. Maubuga le cover 1 million. So no matter now pepuga your roofing 200,000, the insurer will pay. That amount. And then if you're covering your shops, because that's a different risk itself. But again, it's a very good hotel where Sibuga good thing wena itabatak.
Yeah, so I'm covered among Abengu, Swaziland land, among Abeng Dolopeni, Agnenzap.
Yes, you can get cover even lemakaya. Kuswazi nation then siyacela vele evaluation yale yindlu. Sitowati vele ukuthi ngabe ithini le insurance value because your market value and insurance rate ihlukile. Insurance value will just include the cost of replacing tonga, meaning rebuilding the house from scratch, excluding the land. So basically sibuka logo on that valuation report, and then also that combines also the state of your house. So lakuqaleni vele siyayifuna for those tindlu leti ikuthathu did. Emakhaya sibuka ke value for those big houses lanathi taba ma higher risk, meaning higher values siyacelela nama valuation lapho. But typically we don't. Mabe nje nama 1 bedroom 2 bedroom yakho sithi no shuthele kahle outside inside the gates, your fences, bese uyasinominatela ukuthi ufuna cover ngamalini. Sithi nje buka ukuthi wena ngabe cost malini ukuthi wakhele ndlu. So khona wathi at least replacement value yakho ila
Okay.
Yes. So wonke umuntu uyakhona ukusidakala.
Okay, that's good. So how do I go about making a claim after I've suffered a loss? Indlu yami sekuphepuke roof, moto yami seyishayisile. How do I go about getting a claim?
With the houses, it's simple. Nakona, we always say take the pictures of the visible damaged areas. Umanga benje na kuphepukile utashuthele emathayila akho. Mabona kugiza ilikile. Seyivutela la kusilingi, you take those pictures. Usifakele siye sithi ke sicela ikhodi ibe yinye for property. Uyasikhotela your labor nale material to replace everything. Usifakele sigcwalise amaform. Ku property ke what SRC does, they pay you minus the excess. So bese kuba nguwe ke lo tawubhadala labantu bakho labakulungisela kohamba uyothenga. Yes.
Alright, so kuba khona khala mcebo kuba mlabaningi ukuthi yes imali yami ngiyikhokha monthly, but nasengindi claim it takes quite a while to get leto timali leto. Are you different? Is it different with Nedbank? Is the process smooth? How long does it take to get your money?
I think that's where we really show our value, because as an agent to SRC, our obligation is to assist the client through the whole process. So mawuvele kithi sita kucwasa lama form siphushe na ku SRC ukuthi bamane ukusheshe sidakale. But ke vele i-onus iba kuwe to make sure ukuthi usiniketa the information as quickly as possible. And also uma ngabe vele kube nenkinga nje around maybe the whole town of Mbabane or even Manzini or the whole country, uyokhanze vele ukuthi there's a lot of claims. So makunale influx vele kutaba nalama delays. So bese kuba tricky ukuthi turnaround time ithini. But during normal times, it doesn't take long. As long as you provide us those details.
Yes, sorted.
Yes.
Right, so before I let you go, any important things that patients need to know regarding the property insurance, like for instance, my policies, my clauses and everything,
yeah, I think one good kuzelela ukuthi asizame ku prevent any damages that can occur. Check your roofing every now and then. Make sure your house is in order. Nalo clearish and just your yard to prevent those forest fires coming through your property. And then when it comes to your policy, please read policy or policy document. Even if we understand you are there to assist, it's our job to explain to you, so that by the time you figure claim now, we have to say we have to and ask as many questions as you can. I think a lot of people might not have a clue what's going to insurance, but to assist you. Right. Just really make sure also a big one before I forget, EMA premiums. Just make sure you're up to date in my premiums, because if you don't pay your premiums, you won't be assisted in my claims.
Okay. Your worship in corner to assist your clients in it for Lagalagopi.
You can visit us on any of our branches, or you can call us at 3278-1999, or you can email us at helpdesk@netbank.co.za.
All right. Well, there you have it. Insurance specialist from Nedbank Eswatini Mcebo asichazela kabanti ngeproperty insurance, but for more details, do contact them. And on social media, they are interactive. Let's go for a net break. Sabia Konamanji.
All right, welcome back. 39 minutes into our program now, we get into our Enterprise Watch segment, and we want to talk procurement, which is an integral part of a developing economy. When done right, it can also enable SMEs to grow and make meaningful contributions to economic development. The Eswatini Public Procurement Regulatory Agency has, over the years, been working to professionalize the procurement space, especially in response to low compliance levels from many institutions, including government departments. We spoke to Espra's Tulisile Sifunza, who explains the various initiatives being implemented to ensure procurement is conducted properly and effectively across all sectors.
Tulile, thank you so much for joining us on Nedbank Business Watch today. Siyabonga kakhulu ukuthi always when we need to speak to you, you are always available. Public procurement is very key in economic development when it's done correctly. So we've heard that the ESPPRA has made an M&E public procurement framework. Can you tell us more about it?
Thank you so much, Anelsewe. It's also a pleasure getting this opportunity to interact with our viewers on our public procurement matters. We, as you may know, that as a country, we are on the journey of instituting what we call. That is when we are actually reviewing our current public procurement practices and then identifying areas where we still need to actually improve, So look at other areas that can actually assist as a country be able to actually deliver public services, because that's the mandate of public procurement. Ensuring that the public, the citizens of the country, they are able to get the services that they need.
What are the specific improvements that are contained in this framework?
So one of the improvements that we have been able to introduce within the public procurement system is the introduction of a public procurement monitoring and evaluation framework. Now, this is an initiative that we've been able to achieve with the assistance of the World Bank. We were very, very fortunate amongst other countries to be selected to work along with 4 other countries, which was ourselves, Lesotho, Botswana, as well as Namibia. So together, these countries, we came together towards, at first we developed an umbrella, public procurement framework. And then from the umbrella, we're then able to now identify indicators from the umbrella framework to then cascade them down to those that can actually align with our local environment, our local context. So it's an exercise that we started in 2024, early 2024, and was finalized towards mid last year, around June. So then following the completion of the development of that framework, of that M&E framework, we're then finally able to roll it out in April 2025. That is when this new financial year started, and then we're able to actually roll it out.
Well said, Tulile, but I want to understand what is the role of the procurement entities in this framework that you've recently developed?
Procurement entities are expected to develop procurement plans. Have tools before, I would say templates prior to April 2025, but now these tools that we have right now, they've been now developed in a way that the information that we will collect entities, they now align with the indicators that are within the M&E framework. So we also rolled out a procurement planning template, a revised tool, reporting templates, because entities are expected to report on a quarterly basis on their procurement, and also report quarterly contract that the entity was able to enter into in the course of on a monthly basis. So those are the tools that we actually developed and rolled out.
Like you have rightly said, Tulile, at the beginning of this conversation, that this is a new framework you've developed. I want to know if you are providing any technical support, especially to the procuring entities, just to ensure that they play their part in making sure that it is implemented.
We have conducted stakeholder trainings with regards to the rollout of those tools. So it's those workshops, we held them in April. in April, where we had, I would say, almost like a whole week where we're actually looking at compliance matters, compliance requirements, and capacitating them on how to actually utilize the new tools. And in addition to building their capacity in using the new tools, we also had what we called a masterclass session. Now, this masterclass session, we're conducting it along with one of our partners that we often work with in our capacity building initiatives. It's Procura Insight. So it's a firm that is one of the industry players, in procurement in South Africa. So we worked with them where we conducted a masterclass series on strategic procurement planning. Now that is to say, as we move forward, can we go up beyond planning for the sake of compliance, ensuring compliance, but can we ensure that the activities that we plan, they are aligned with our organizational strategies?
Maybe I should have asked this question first. What is the implementation plan? Can you say that to us?
The introduction of the framework, it's a new initiative, in the country. So it's also, as we are rolling it out, we also found it to be a good strategy for us to say, as much as we are rolling it out to all procuring entities, right? But then what we did, selected a number of PEs, just a few, what called a pilot, just to pilot now the effectiveness of the tool within those procuring entities. So we selected about 20 procuring entities, which are, I would say, just a diverse group. We have those procuring entities that I would say they are at good in terms of compliance, and then we have those ones that are sometimes they show up, sometimes they don't. And then we also have those entities that I would say are a bit more behind when it comes to compliance. Now, in this case, when I'm talking about the compliance, I'm talking about the compliance, the procurement plans development, the reports submission. So we're looking at them from that aspect. So what we will do then with this piloted PEs, right? The plan is for or the ease of usability of the tool. Are they able to actually provide the information that is required? Is it the type of information that we can actually use? Because that's another gap that we had identified to say, yes, some procuring entities, they do submit the data, but you find that there's quite a lot of errors in that data that they actually submit. It's not easily usable. It becomes difficult even to come up with a proper analysis, of the data that has been actually provided. So with these pilot entities, we are hoping to then assess if it is entities to actually utilize the tool, they are able to provide the information that is required. And then from our end as well, are we able to then conduct this analysis and measure the indicators as per the information that has.
Having worked with the Eswatini Public Procurement Regulatory Agency for some time, I've realized that you are doing a lot to professionalize the procurement space. Are you seeing any tangible for everything that you have done so far?
I think it'll be a testimony. Have you seen how many adverts are always coming up where they are recruiting officers, procurement managers, So for us, it is an indicator to say, gradually within our procurement system, now the recognition of the role of procurement within an organization, it's recognized.
93 institutions. What can you say about the rate of compliance? Is it maybe over 50%? What can you say about that?
I would say we are not where we would love to be, right? But we are getting there. There's been an improvement, over the past years. As I mentioned, at this case, what we are talking about when you're looking at this compliance, it's just the minimum, that is the development of procurement plans, the submission of procurement reports, because that's the information which we are then able as the agency to then evaluate and assess the performance of the public procurement system. So we are not yet where we would like to be, but I can say that there is quite a lot of improvement that we are seeing from procuring entities, the compliance level, the support, the willingness, to actually improve. It's really, I would say, alarmingly, not alarmingly in a way, but it's becoming more exciting. I can say we are witnessing it from procuring entities.
Having you on the show, Tulile, has been a pleasure. Let's hope that one day when we speak to you, you will tell us that all 93 institutions are following the public procurement procedures. Thank you so much for being with us today.
All right, and that said, that was business journalist Nelsiwe Ndlangamandla with ESPPRA's Tulisile. It's 10 minutes before 3. We go for an ad break and come back with today's final segment, which is the market analysis. All right, welcome back. You're still watching Business Watch powered by Nedbank Eswatini. This is the last segment of today's program. It's 9 minutes before 3 o'clock. We take a look at today's markets with Nedbank's Bongani. Very good afternoon. Thank you for tuning in, for coming through today. So yes, let's take a look at markets today. Iran and Israel are still at it. Today's the 6th day. So how is that affecting markets today?
Yeah, good afternoon, Lulu, and good afternoon to your viewers. It's a pleasure to be here. As you rightfully say, what's moving markets across the board is the conflict in the Middle East, which started last week Friday, and it's been going on now for quite a while without any signs of it abating in the near term. And that's causing a lot of concern, and you'll see amongst most market prices, from FX markets to commodities markets to equities, that story is the same throughout. So that's what tends to be moving markets. There are pockets of other information that are coming through. For instance, in South Africa, there was expectation of the inflation numbers which came out this morning, where the inflation in SA remained stable at 2.8%, which was unchanged month on month. We also had inflation in Eswatini. Those numbers came out earlier this week, which went down by 1 percentage point to 3.2% from 3.3% in the previous month. So we do see inflation continue to ease, but the conflict in the Middle East is putting a risk on that.
Yeah. Speaking of South African rand, let's take a look at today's numbers. In the markets today, what's happening?
Yeah, that's right. So you'll see from an FX perspective, you've been seeing the rand lose a bit of ground against the dollar and against most major currencies, being the euro and the pound. And again, as we say, this is because of what's happening in the Middle East. And what that is doing is that the market has put on a risk-off sentiment, if you term it that way, where it's a flight to safety, and the rand, being an emerging market currency, is seen as risky. So there's a flight to safer currencies, including the dollar and other developed market currencies. So you can see against the dollar, the rand is weaker by about 1/3%. Against the euro, it's weaker by about more than 2/3%, and against the pound, it's weaker by almost a full percentage point. And this is the same story. But what's very interesting here is that the strength of the dollar is not what it used to be. So in previous crises, if you'd call it that way, the strength of the dollar would be more pronounced. But I think the dollar has been weakened by first the Trump tariffs and that policy stance, and you've seen the world sort of start to move away from the dollar. But that's not to say the dollar is still not the dominant currency in the world. It's just that its strength is starting to wane, and you see that in markets, and you especially during this time around.
All right. So it seems oil prices seemed to have eased today, Wednesday afternoon, in the Asian trade. What is happening? Let's move on to commodities and take a look at today's figures.
Yeah, no, thanks, Lulu. And I think that's correct. As I said earlier, there has been a flight to safety since this crisis started, or the conflict in the Middle East started. Gold is down about 0.22%. But if you'd look at it in context, compared to the same time last week, the price of gold is up about 1.5 percentage points. So I think the easing in the price is an overnight occurrence as markets are waiting to see what happens next, especially after President Trump cut short his G7 stay to go back to the White House. They're waiting to see if the U.S. is going to join the conflict on Israel's side. To fight against Iran. We'll see how that goes. But the story with oil is that oil is still up about almost 2 percentage points, but oil is up more than 10 percentage points since the start of the conflict. So that is very concerning, and that has
increased still if it goes on.
Potentially, yeah. And that has consequences for inflation, yeah. And as a result for interest rates globally.
Okay. So lastly, let's take a look at equities today. What is happening?
No, thanks. As you see across equities markets, the story is the same. The Iran conflict is driving sentiment around. What you see is that the UK markets, equities markets, are relatively unchanged. But you saw the S&P 500 down almost a full percentage point yesterday, and this was as a result of traders adopting a risk-off sentiment because of risk that the U.S. might join the conflict, okay. And what that means from a growth perspective within the U.S. When you look closer to home in South Africa, the JSE All-Share Index is also down about 0.33%, and this is because you see investors again flight to safety, with SA being an emerging market economy. You see investors move money to where they deem to see safety. So that's basically it. In the next couple of days, hopefully we see more certainty, and hopefully we see an end to this conflict. But we'll be watching markets to see what happens.
Okay, just lastly, quickly, how are investors reacting to this? Energy investors, to be precise.
No, thanks. I think that's a very important question. So, for instance, from an equities perspective, you have seen equities down almost across the board, but the one sector that is an outlier there is the energy sector, where, for instance, in the U.S., the energy stocks were up yesterday about 5 percentage points, because obviously the potential disruption in supply chains in the Middle East means that you will likely see higher energy prices. So markets are starting to price that in. So that is the reaction. And I think you also see those who buy outright commodities, the price movements in the commodities prices, with gold being up about 1.5 percentage points and oil being up about more than 10 percentage points. Okay. That investors are pricing in the uncertainty.
All right. Thank you, Bongani, for that analysis today. Well, there you have it. Those are today's figures. This was the final segment of Nedbank Business Watch's market analysis by Bongani, who's the head of Treasury at Nedbank Eswatini. It's 2 minutes before 3 o'clock. We've come to the end of today's episode. Catch us again next week, Wednesday, for Nedbank Business Watch. Have a lovely day. We'll see you next week, Wednesday.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.